You're watching Business Incorporated live from Channels HQ. Coming up, International Research Institution Fitch Solutions forecasts average inflation of 33.4% for Ghana in 2023. Tanzania diamond exports increased significantly to $63.1 million by November 2022. Plus, Cameroon expects $33 million from cocoa export tax revenue in 2023. Hello and welcome to the program. I'm Ladi Williams. As always, let's check in on the markets now. Let's take a look at how your money is performing at intraday. Starting on the African continent, there we see the NGX there marginally up 0.02%, not convincing enough to predict the close for today. South Africa, 73,212 points, down by 0.74%. Other markets we track, we see the EGX 30 there, continue that bullish run. The market up 0.27%, breaking the 15,000 all-share index point there. And we see Kenya again bearish today, down 1.08%. Yesterday we've seen the sell-offs with major equities in Kenya there, and seen it losing that 120 points level. Let's see what's happening at the NGX now for intraday analysis. We have Oluwaseun Odosunmu, Head Investment Research at Parthian Securities. Great to have you on the program. Good afternoon.
Hi, good afternoon, Ladi.
Yeah, so last I checked, the market was up about 0.02%. Not so convincing. What's happening right now?
Okay, so we've seen activity slow down today. We've not seen the regular buying sentiments that we've been seeing since the start of the year. It's not surprising. At this point, we expect a catalyst to come and, drive activities. I mean, historically, during these times, we normally see corporate actions. This time last year, we had, the listing of Boa Foods on the exchange. We also had additional listing of Airtel shares on the exchange. So that actually, spurred the investors' interest in the market. So we're not having that come right now, but nevertheless, everybody's looking forward to the release of the fourth quarter earnings from companies, and that will most likely drive increase, or that would most likely increase investor participation in the market. So,
and talking about talking about the fourth quarter earnings, what are you expecting? Do you think any one of these companies are going to beat analysts' expectations?
A couple of them do quite well. Looking at their third quarter earnings, the only thing that comes to mind now has to do with the input cost in terms of energy cost, cost of diesel, and the fact that we had the scarcity. The scarcity was a bit rampant in December, so that is the only worry we have. Apart from that, corporate numbers have been looking quite good, especially for 2022, and we expect that to also filter into this year, 2023. Nevertheless, we need to look at the numbers holistically. I remember saying this a couple of weeks ago that when we did the analysis, we saw that a lot of companies now, between 70 and 80% of the companies on the exchange have done way better than they did for their 2021 numbers in just the third quarter alone. So we expect that, their full year numbers will actually look good. And that should actually translate into higher dividend payment or in terms of the dividend payout ratio too. So we're actually looking forward to higher dividends for 2022 compared to 2021.
And it'll be interesting to see how all of the energy cost issues, inflation, PPI, how that plays into the OPEX, operating expenses for most of these companies. But looking out for those numbers for sure. But what stocks are on your radar right now?
Okay, so based on our view, we're looking at the oil and gas sector. We're looking at we're also looking at the banking sector. There are some stocks there. For instance, we have Zenith on the top of our list, and that's just basically because of the dividend yields. We know that the dividend yields for Zenith is quite high. We're also looking at the telcos. Those guys are poised for growth, given the fact that, we would see more in terms of the numbers coming for the PSB license and the 5G, the adoption of the 5G license coming to play. So I think for us, while focusing more on the telcos, the banks, and some stocks in the oil and gas sector.
And obviously, next week we have the first meeting, the first MPC meeting for the year 2023. What are you expecting?
Um, we can't say exactly how the outcome will be. I mean, right now we can only use the historical data. So historically, the CBN governor said that the main key driver for the hike in interest rates was because of inflation, and we saw the December inflation, I mean, decline marginally to 21.34%. So the expectation is that, I mean, following what other central banks have done globally, we do not expect them to just leave rates. We expect a marginal increase in rates. We expect a marginal increase in rates, but because they've been talking about how the key driver is just inflation. And now we've seen inflation pull back just for December. Based on our forecast, we expect inflation to continue in a downward trend, especially for 2023. And that is basically due to the base effect, not necessarily because consumer prices or prices of commodities generally have declined. So we expect a mild increase at the next meeting.
All right, we're looking out for that meeting and how investors actually react to it. Thank you so much, Oluwaseun Dosunmu, Head Investment Research at Pathian Securities. Thank you so much.
Thank you.
All right, let's take a look at what's happening in the Middle East now. We see it's a squarely mixed sentiment, just like yesterday. Abu Dhabi in the UAE, that's down again 0.26%. And you see a Dubai index, that's also down 0.13%. Seeing sell-offs there. And we see the Qatar index, that's up about 0.14%. We see Saudi Arabia continue that bullish run. We saw it's up 2.12%, convincing at intraday. That should actually play into the close for today. Let's look at Asia now. See markets there mixed, traded mixed after tracking losses on Wall Street overnight. In Japan, the Nikkei 225 that traded down 1.44% to close at 26,405 points, while the Topics index that was down about 1%, 1,915 points after Japan recorded another trade deficit for December, one day after the Bank of Japan surprised markets by keeping its yield curve tolerance band unchanged. The yen currently stands at 128.14 points against the US dollar. South Korea's Kospi inched up by 0.51% to close at 2,380 points, while the Kosdaq added 0.16% to 712.89 points. Australia's S&P ASX 200 edged up 0.57% to 7,435 points. Hong Kong's Hang Seng Index fell 0.48%, while mainland China's Shanghai Composite climbed 0.49% at 3,240 points, and the Shenzhen component was up 0.87%. All right, let's head on to Europe now. We see Germany's presence at the World Economic Forum is being felt at this time with Olaf Scholz, the only G7 leader in Davos this week, and has brought a message of German economic resilience. Let's talk to Janelle Dumoulin right now. Great to have you, Janelle. So what has Scholz said in Davos?
Scholz's main message was basically that Germany is back. And by that, he means that Germany is weathering the energy crisis triggered by the interruption in supply from Russia. He talked about how several new liquid natural gas storage terminals were up and running or in the pipelines, and announced that the energy supply for this winter is secure. But the meat of his speech was dedicated to how he expects that the war and rising energy prices will precipitate an acceleration in renewable energy investment. He highlighted Germany's goals to achieve a net neutrality on CO2 emissions by 2045, and said he hoped technology and innovation could help make this happen. and allow Europe's biggest economy to retain its manufacturing prowess. He reminded everyone at the forum that the first COVID-19 vaccine was developed in Germany, and that this should be taken as a reminder of how much focused minds could accomplish in a short time. He said the green transition should not be, quote, the end of our industrial powerhouse, but a new start. He asked the audience to imagine a future German chancellor addressing the forum in 2045, presenting Germany as one of the world's first carbon-neutral industrial nations.
And I know he did talk about protectionism. Which country is he targeting this time with that comment?
In this particular instance, Scholz was talking about the US and its sweeping climate change legislation package, the Inflation Reduction Act. Now, Europe has been criticizing provisions in the act that would see some large subsidies offered to green industries, but only if they are based in the US. Scholz said, quote, protectionism hinders cooperation and is detrimental to climate change mitigation. This is an ongoing sticking point in EU and US relations, although Washington has said it is open to discussing these issues. Just generally, however, he warned against the dangers of a new fragmentation of the world, obviously a very important talking point for an export-oriented country like Germany. In a forum that's geared towards what's become an increasingly fraught word like globalization, Germany wanted to come in defense of the model.
And obviously so much to unpack from Davos. How are the markets looking in Europe? All right, looks like we lost Janelle there. We'll try and get her again now. So let's move on to the U.S. markets. Let's take a look at what's happening with the oil markets now. We see oil prices there where fell today, extending losses from the previous day as a surprise jump in U.S. crude stocks weighed on the market, along with fears of recession were heightened by disappointing U.S. retail sales and output data. Brent crude futures lost by 83 cents to $84.15 a barrel after earlier easing to $83.76. U.S. WTI crude futures declined 98 cents to $78.50 a barrel. It earlier fell to a low of $78.13. U.S. December retail sales fell by the most in a year, while manufacturing output recorded its biggest drop in nearly 2 years as higher borrowing costs hurt demand for goods. Still, Federal Reserve officials said interest rates needed to rise beyond 5%, even as inflation shows signs of having peaked and economic activity slowing. And gold prices inch higher today as investors weigh the chances of the U.S. Federal Reserve slowing its pace of interest rate hikes, while a firmer dollar capped the bullion's appeal. Spot gold, that was up about $1,906.01 per ounce at early trade, while U.S. gold futures fell 0.1% to $1,906 per ounce. Fed officials signaled that they would push on with more interest rate hikes, while Philadelphia Fed President Patrick Harker and Dallas Fed President Larry Logan said they supported a slower pace of tightening. Well, investors watching out for what the Fed's going to do next. All right, we'll take a break now. When we come back, Commodities Market Update is next. Do stay with us. Welcome back. Still watching Business Incorporated live from Channels HQ. Let's kick off now with the U.S. markets. We see stock futures traded lower today, building on the losses from previous session as rates and recession fears dented market sentiment there. If you look behind me now, see it, the Dow Jones Industrial Average, that's down 0.55%. We'll see the S&P 500 futures down 0.56%. So we're seeing over 0.5% losses with the futures markets right now. But let's get a summary of yesterday's close from our correspondent, Maria Bird. Take a listen.
Stock market closed lower on Wednesday as the Nasdaq broke its 6-day winning streak, closing at 1.2% down. The S&P 500 closed at 1.6% down, and the Dow Jones closed at 1.8% down. Investors were not looking at the good news of the day, as inflation has begun to stabilize and was a bit moderate over the last 30 days. But they focused on the downward slope of retail sales, which showed to be a bit down over the last 30 days. This is also due to the lack of productivity at the end of 2022 and a slowing down of the economy. Many investors are expecting that the economy will continue to slow for the next few months ahead.
Thank you so much. That was Mary Barrett, our correspondent there, giving us a summary of yesterday's close. And obviously, recession fear still weighing on those markets. Let's head on to the commodities market now. We're going to be talking about kerosene, a popular fossil fuel with multi-purpose uses, including cooking, lubricating, and powering jets. Consumers have expressed concerns about its safety and its proneness to fire risk. Has made many shift to use of LPG cooking gas, and these fears have constrained the demand for kerosene over time. Let's talk to Miriam Odena, analyst, financial derivatives company. Great to have you, Miriam.
Thank you for having me.
So what do you think is the long-term outlook for the demand and price of kerosene in Nigeria?
So if we look at the risk, let's face the risk concerned with the use of cooking gas, that's LPG, and that of kerosene. So if we actually, statistically, cooking gas is riskier than the use of kerosene. This is because cooking gas has a lower flashing point, and the flashing point is used to determine which commodities are more flammable. So the lower the flashing point, the more flammable the commodity is, and gas has a lower flashing point than kerosene, so it is more flammable and it is riskier than the use of kerosene. However, we can still see an increase in the demand for gas because it is a cheaper alternative compared to kerosene. And in the short term to medium term, we will still see the price of kerosene and its demand being relatively elevated. This is because of the increase in the demand for aviation, because kerosene, also known as dual-purpose kerosene, is used to fuel jets and planes. So the increase in the demand for aviation due to insecurity on the railways and on the roads would spur the demand for aviation, which would increase the demand for kerosene, as well as how hard it is for Nigerians to adopt new modes of cooking or new sources of energy, clean energy such as gas.
And obviously, we have the Dangote refinery that's coming on board first quarter of 2023. How do you see this impacting the bottlenecks we see with kerosene?
So the Dangote refinery is one of the modern day refineries, which means that it has better technology which could improve its supply. So the Dangote refinery is expected to, in the near or long term, to increase the supply of kerosene as well as dual-purpose kerosene. And this is supposed to reduce the supply bottlenecks in the country. For example, the current fuel scarcity that we are experiencing is due to low investment in the downstream sector of oil, which the Dangote refinery is going to take care of, since it is increasing demand for increasing investment, in this sector as it refines and transports this oil to consumers. So we need to keep in mind, though, that the Dangote refinery is not a silver bullet. It won't completely solve all the problems of the oil sector or improve demand by a lot. This is because of factors such as the subsidy bill, which affects efficiency in markets.
All right. So obviously, we have hydrogen-powered aviation coming into play, at this time. How do you see this, if it actually takes root, how do you see it impacting the price of kerosene and demand?
The hydrogen-powered planes are expected to begin commercial operations in 2030, meaning that we still have 7 years to build and work on the associated risks with this type of thing, such as hydrogen it's very hard to store and it's relatively more expensive than kerosene. So if we're switching to a more expensive alternative, this means higher air prices and airfare price and air tickets prices. This means which are already increasing due to the fuel scarcity in the country. So consumers, if in the next 7 years, government is able to curb this risk or reduce this risk associated with the use of hydrogen powered, well, we can expect the demand for kerosene to fall, since there's a reduction in demand for jet fueled powered planes.
Miriam Ode, analyst, Financial Derivatives Company. Thank you. All right, let's take a look at our stories now. The international research institution and market information firm Fitch Solutions has reiterated a disinflationary process for Ghana in 2023, forecasting an average inflation of 33.4%. According to its latest assessment of the Ghanaian economy, inflation will only decline gradually in 2023 as taxes hike. And Tanzanian diamond exports increased significantly to $63.1 million by November 2022. That's according to the Bank of Tanzania. This is more than 7 times of the $8.4 million export value that was recorded in the year November 2021. Good performance has been attributed to the country's diamond producer, Williamson Mines, which is currently under suspension. And Cameroon expects to receive at least 20 billion CFA francs through the taxing of cocoa bean exports in 2023. So according to the government, it's going to help the country in fueling its budget. Unprocessed cocoa beans being exported will be subject to a tax rate of about 10%. During the 2021-2022 cocoa season, Cameroon exported 217,107 metric tons of unprocessed cocoa beans and locally processed 86,850 tons. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye for now.